Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, May 21st. Taking a quick look at futures. Not a lot going on. NASDAQ and large caps are up about 0.25%. Small caps a 0.5%. Gold and silver basically flat. Copper's down a little bit, 0.4%. And oil is up 1.3%. I was reading a little bit and came across some information about the oil market. It's been soft the last couple of days. A lot of chatter going on about the Biden administration lifting the oil export sanctions on Iran as they try to get back into the Iran nuclear deal. And that's been weighing on the markets. But when you think about it, Iran is still selling their oil, right? They're not just not doing anything. They're selling it to China and other market, black market type oil at a discount. China's probably taking all they can get at a discount. So actually what's going to happen is, say they lift those sanctions, that just means the price goes up to China. Everything will be above board and there won't be that black market for it. So I don't think the supply-demand dynamics really change. So while there could be some more downside in oil, I think it's going to be limited. I think as we roll towards the summer driving season, travel season with the COVID lockdowns easing, I think there's going to be plenty of demand for oil going into the summer. So, I'm not a big oil trading expert, but I think there'll be a bid under oil, and I don't think the supply is going to really come online in a big way. I think supply will be relatively contained. On the macro front, we've got not a lot going on. There's a composite flash PMI this morning. Existing home sales at 10 o'clock. And of course, a reminder that today is May option expiration. And with that, number one, don't forget to go through any option positions that you have today. Make sure nothing falls through the crack, that you actually have something expiring to avoid any unwanted assignments. Tomorrow morning you wake up and you got 1,000 shares of something you didn't even know you had or want, etc. Make sure you close them all out or roll them if you have expiring options and you want to, stay long or short a given position. Also, I want to backtrack a little bit. If you were listening yesterday, I was trying to give a little coaching advice on recapping your trades from Wednesday, and I made the comment that you should have made a lot of money yesterday. Well, I said what I said, but it was very awkward and not strictly correct. Number one, making a lot of money is all relative. A $300 day for me might be great, and a $3,000 day for you might be horrible. So, making a lot of money is totally inaccurate and not correct. Good trading flows from having a good process, one that you're confident in and that you can consistently execute. That's what good trading is all about. Taking objective trades, honoring your stop, following a process day in and day out, and honing your execution skills. The rewards of doing that are money. But you can have a good trade and lose money, right? If you take a long trade and you get stopped out, you took a paper cut, you had a loss, but it was still a good trade. Why? Because you followed your process. So what I was trying to say, and I butchered it trying to say it, if you're struggling and not having the results you want, not in terms of money, but just successful trades, it all goes back to your process. And what I find when talking to people, even just yesterday in the trading room, that one trader was lamenting, I'll have 10 good trades and then I'll give it all back on one trade. And the way that happens is usually that you become confident because you're on a winning streak, and then you lose your discipline on either position sizing or losing that objectivity in your entries or ignoring your stops. So that's the only way you can take a big loss, is if you don't honor your stops. So always do that recap. It's a great way to, after the market is closed, when things are calm, kind of think about your day, make some notes. Where did you execute well? Where did you make a mistake? What could you have done? Etc. And then the results will follow. If you do that and you hone your process and you hone your execution, good things will happen. So I hope that clears that up, because I'm really not a money guy, to be frank with you. I want to be a top-notch trader, and the fruits of that will come if and when you achieve that high level of consistent execution. So, okay, let's jump into SPY. Yesterday and the day before, really, Wednesday and Thursday, we've had two big up days. Crypto is quieted. Yields fell as inflation fears have somewhat subsided. Commodities have backed off. I mean, lumber is down 6 straight days, down $500 or $600 off the high. Copper has gotten soft. A lot of the other input commodities have backed off those parabolic runs. And that has fueled the growth trade. Everybody was selling the cyclicals in the last, sell restaurants, sell retail, sell commodities, sell airlines. So there was a snap rotation back into growth. We saw that in the FATMAAN names, the Facebooks, Apples, Googles, Microsofts. We saw that, everybody has rushed back into EV and green transformation stocks. The ARC stocks have bounced. The thing is that sustainable? Is this, okay, it's back to growth and that's it? I really think what's going to happen is we're going to stay in these choppy markets where, today or next week or 2 weeks from now, it's going to go back the other way. There's going to be an inflation print. There's going to be a jobs number. There's going to be something that comes out, and then there'll be like a mass exodus of growth, and then piling back into value. How do we want to handle that? I think in 2020, a lot of traders were bailed out because all you had to do was be long something. It didn't really matter what it was. Be long and you'll get bailed out. Now in this choppy market, I think you've got to watch the levels even more carefully and take profits when you get them. For instance, I don't think, and we're traders, not investors. And, investors on a long time horizon is a totally different discussion. But for instance, you caught the reversal in Facebook. You got to ratchet up those stops, watch your levels, and be ready to take profits at a moment's notice, not just camp out, with long duration trades in technology or growth, and then just sit there and watch those gains disappear when they roll back into value growth, or value and cyclicals, because then the rotation will be back the other way. So long way of saying, I think we got to be really nimble here. Don't get too far out over your skis. Now you've piled into 15, software, solar, EV stocks, and then have them pull the rug real fast. So I think stay nimble is the watchword. So SPY 2-hour, double bottom with bullish divergence the other day has resulted in this rally. We're right at the bottom of this gap, and we'll see if they can close that gap today or if they back off into OPEX close on Friday. Remember, there's a lot of dynamics going on behind the scenes with market makers and knowing where all the calls are positioned. So for instance, I know there's a call wall at 420. So there'll be a lot of incentive today to make damn sure all those people don't get paid. Now that's $5 above, but maybe there's some intermediate levels in here, say maybe 418, where they say, hey, we're not letting it go above that and get that strike pinning phenomenon on a Friday afternoon in OPEX. So a lot of dynamics. Just honor your levels as we proceed through the day. Now I have a measured move here of this potential double bottom. If we were to break above 418, which was the height of this move, I did a little projection and put that at roughly 429. Now there's a lot of work to do between here and there, but if we break above here, break out, and we're able to get above this 420, then I think having that 429 target in the back of our mind from this double bottom measured move might be helpful as we roll into June. 30-minute chart, you can see we're at the midway point yesterday of this gap, and we came back at the close. So today, I think you can be long if we recapture this level at, say, 415.75, and then look for a move back to yesterday's high, and then possibly even a gap fill up to 418. If you wanted to try a tactical short and it looked like things were soft, you can be short against 415.75. And then remember, this 414 was a big level going back. And if you broke that, then I think you come back here to trend line and possibly all the way back to 412. So, and note that this was resistance on the way up, this band between 410.50 and 411.50. Now that band is support. So if we were to go back and retest this level, if we were to break below, then that target becomes these prior lows again. Moving on to the Qs. Here's that same double bottom look with bullish divergence. That was a 3% move. So a measured move from 327 on this breakout yesterday gives us a measured move target of 337. Now today, we've got this downtrend line that may prove to be stiff resistance. I wouldn't try to get long. I wouldn't try to get too cute today unless price could take out this 330 level, this downtrend line, and then you can look for 332 and possibly 334 this afternoon. Otherwise, we may come back to test this 327 area, and you can see that the lines come in a little bit different. I would respect that 2-hour trend line more than this 30-minute one. And here you've got 330 there as a reference point anyways. I think you can take a long if we were to break above 330 and hold it, And then we've got this open gap up here at between 333 and 334 that has yet to be filled. And then there's that 327 support that was resistance before, and now it has switched over to support. And also notice it was very important yesterday. Let's go back and look. Remember the EMA. This is the gold is a 50 EMA on the daily. So price recaptured that. That was a very important bullish technical event. And so if and when we come back down towards 327, bulls really want to hold the 50. Because you break back below the 50, then of course that would be a signal that there's still some selling pressure out there, and the bears have not gone back into hibernation just that quick. IWM has had more of a muted bounce today. I think you key off of this 220.50 level, and you can see again the gold is the 50 EMA on the daily. There's going to be a lot of congestion in here. I think that could potentially be a very frustrating trade if you got long at this 220.50 and you have all this overhead resistance in here in the form of a downtrend line. You've got the uptrend line. You've got the 50. That's a lot of congestion. I would almost say, you know what? Let's get over 222. That will take out the downtrend line, take out the 50, and break back above this uptrend line, recapturing the trend. I like that better than trying to, stay in here, possibly get chewed to pieces with a lot of whipsaw action. Now on the downside, it's a little different story. If you come up to 220.50 and you stall, then I think you could come back to 218. So I think it's going to be easier if there's a weak day to try a short in IWM against all this congestion and play for 218 rather than trying to get long. And here we see all that congestion again, downtrend lines, overhead resistance. Here's that 220.50 level that we just talked about. I think you're right here in the middle of the range. So I don't really see a trade there at the open anyways. So I think you got to wait for 220.50 or 219 at the open to see what you might want to do. Like I said before, I think a big long up here might be a frustrating trade. Moving on to Facebook. Nice bounce off of this 305 breakout level from the daily, and you got really a straight line between 305 and 319. I mean, that's a $14 move. If you captured that, kudos to you. Now we have filled this gap. So now today, 319 is your obvious pivot. You break above 319, you could see 323 up here at this next level of resistance. If it gets turned back and things get iffy, you could come back and see 316 or the bottom of the gap, which is at 315. You really don't want to see 314 break, or you could come back to 310. But if you caught all this move, you got to be ratcheting up your stops or your strikes to take that money to the bank. Make sure you don't give it all back, either today or next week. But really nice move in Facebook. Apple has been doing some good work to the upside. This was a big level, this 126.5 up to 127. That was a key resistance level on the daily. We also had the downtrend line It took all that out yesterday and filled this gap. So now it's all about holding that support band between 127 and 126.5. I think if you're long, if you caught any of this move and you're still long, that's your stop. You don't want to have this be like a little false breakout and then break back below. That would be, short-term bearish. And we do have this opening gap from yesterday has yet to be filled. But as long as it holds 127, 126.5, I think the door's open to 128.50 and even up here to this gap at 130. Tesla gapped higher yesterday, made a move up towards 590. You've got a resistance level here at 595. If you break above that, then the door's back open to 625. I think that's your clear as day pivot. 595, if it takes that out, you can be long. Right here in the middle, if you don't have a position, I don't think you do anything. You wait for 595 and you see if that level is either rejected or if there's a breakout. Microsoft, again, another very positive bullish move. Why? We had the double bottom right here, bullish divergence. RSI was higher at the second low than it was at the first. Momentum was higher at the second low than it was the first. That's bullish divergence. We got the move in price. We broke the downtrend channel and we broke above this 245, which was a key breakout level on the daily. So now if you caught this move, 245 has to be your stop. And if you're trying to be a lot more refined than that, well, you're right here at 246. I think 245 is your stop. And if you want to be long and you got a pullback today to 245 that held and you want to establish a swing long for next week, you can get long 245 and see if we can get a move back up to this 249 level and possibly even come up here and fill this gap at between 251 and 252, and then this big level here at 253. So it's all about holding it now for Microsoft. Like I said, it broke the channel and broke above this 245. If it holds it, it's good shape. Amazon, no free 50 club yesterday. We had the move up from the middle of the range, and then it just sat there all day. So there was no real follow through, and like you see, it was only up 0.5%. So today, your clear as day pivot is 32.50. Above that, you can be long. Below that, you can be short. And remember, today being Friday, Amazon is one of those names. If you're into lottery tickets on a Friday and you get a runner, then you can get paid really, really well. But just remember, they're lottery tickets, and that's gambling. Only play with money you're happy to lose. So if that's your thing, you probably don't need me to tell you about it. But there's a reminder. And that goes for any stock that you see is really moving. If you're, into the lottery ticket game on a Friday afternoon, then, take a shot if you want. Google gapped up, leaving this gap yesterday, and now we're above 2,300. That's your clear pivot. And like we always say, you don't want to see price come back into this trading range. Why? Because then that would make this look like a fake move. and then your target would be at least back to the midpoint of the range at 2270, but then probably even 2240. So the bulls got to hold this breakout and then shoot for 2330, and then to fill this gap up to 2350. If you caught this move, of course, roll up your strikes and your stops. Make sure you bank this nice gain that you had, and don't let them take that away from you. Netflix had a good day. We had this firmly established downtrend line, big impulsive bar out of the open, and it recaptured this trading range at 500. So now, just using our rules in reverse, it recaptured this level. You can be long against 500 and look for 507.50 and then 515, and then with any luck, a big move to fill this $35 gap up to 550. So notice that after that impulsive move, it just stopped. That was it for today. For yesterday, there wasn't any kind of continued grind higher. So now, if you wanted to take a long in the next week, then you can set up your long against 500 with a stop just below. I mean, that's a great risk-reward trade because you've got all this potential upside and you've got a location where you can put a relatively tight stop on Netflix. So from a risk-reward standpoint, if you like the name, this sets up really well for a long idea if you think growth is going to continue to have a bid into next week. We've been watching SMH as not only a trade, but also for risk sentiment. And I think as long as you see bullish action in the semis, that bodes really well for growth. That bodes well for tech. So even if you're not trading it, keep that chart handy. I think it's a good proxy for risk appetite. And as long as we're talking about risk appetite, remember Friday afternoon from 2 to 4 is the most important trading hours of the week. Why? Because it lets you know, are traders bold and willing to hold risk through the weekend and take on that weekend risk, or are they peeling back risk and taking a more neutral stance into the weekend? That can be a nice tell on trader mentality. How do we close the week? And I always pay attention to that on a Friday afternoon. So here, if you got this bottom here, or you got this breakout here at 233.50 above the downtrend line, trail your stop. If you're not in now, I don't think you want to take anything in no man's land. Focus on 242.50. That was a level from way back. You see here, support, 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 fake breakout, resistance, etc. So now it's resistance again at 242.50. If it breaks above that, then you can be long and look for this gap to fill here from 248 to 250. That was also a level from way back when that we had focused on the downside on that break below. And that turned out to be a great trade if you were involved in it, if you stuck with it, etc. So watch SMH. And last chart for this morning, I just wanted to bring TLT into focus. This move here, this down move in TLT, and then the flip side of that is rise in bond yields, was in conjunction with that big inflation print and jobs number from a couple weeks ago. And now price has stabilized and actually drifted higher. So if you see TLT rising, that means rates are falling. That's supportive of growth and tech. If you see yields rising / TLT falling, especially if you break back below 135 to come back here, you're going to see people probably bailing out of tech because of the, now we're back on to rising interest rates and that whole narrative. So I think if you're heavily involved or interested in the growth trade, the tech trade, FATMAAN trades, etc., always keep an eye on TLT. That'll be a good gauge, a good thing to keep your eye on, especially if you're into growth. TLT going down is negative growth. Rising TLT is positive growth. And a really big level here is at 139. The falling 50, you can see that it's capped all the gains up here. And if you got to move up into 139, I would be inclined to try and fade that. And then you can shoot against the 50 and then, stop out if it breaks back above. And if it does that, then the reopening trade, it really gets called into question. Why would bond rates be falling if the reopening and inflation is rising? That wouldn't make any sense. So keep that in focus. Okay, if you're new here, I really appreciate your time. Hit the subscribe button and the alarm bell. If having these mapped out levels and having a little trading plan heading into the day would be beneficial to you, you can get all my content that way. And also actually jump over in the show notes, and there's a link to register for everything that I do at tradersprofitcompass.com, and you'll get an email on everything I send out. And I forgot to mention, I'm going to have 3 or 4 trade ideas on the blog this morning, so make sure you take a look at that if you're hunting for names. Got some decent setups there that I want to share with you. Longtime subscribers and listeners, thank you very much. I appreciate you being here. And hit the like button. Give me a positive comment, and that'll help me get my message out to a wider audience, letting them know that you see value. And if you want, I'd certainly appreciate if you go the extra mile and retweet my content, send the link along to others in your trading group. They may be able to benefit from the work as well. So thanks. Have a good day. Have a good day of trading, and talk to you next time.